Good afternoon, folks. Joe Baker with Trade Pilot Pro. Got a lot of requests and a lot of questions the last time I displayed our balance indicator. Now, our balance indicator is nothing more than an indicator of information. Okay, when I call it an indicator, it's basically gives me levels. Now, again, as the day progresses and as the day closes, a lot of the information goes away. It's dynamic, so it prints as it goes. It gives us settlement from the night before. It gives us prior high lows. It gives us weekly levels as well. It kind of gives us all the big numbers we need. Okay, and it's hard to remember them when we trade. So this is kind of an assistant per se. It tells us at what level the high and the low is for the first 15 minutes. It tells us where the average is on the trade on the open. What's the average price? Okay, are we above that average price? Are we below that average price? Okay, it tells us the first hour high and low. Okay, and that gives us our overall picture. It gives us our big picture for the market that day. Now, if you want to take this one, because this day is already done, this is today, this is our average was 977. So we know underneath 977, okay, we're going to have a problem, getting any strength to the upside. Okay, so if we don't get above 977, we're in some trouble and we're going to have some liquidation to the downside. Now, again, under 968, I know there's going to be some issues as well. Okay, so you come down. What happened here is we hit the 1 hour low. We came back up. Okay, we closed right at the 15-minute low. We could not get inside. You see this rejection candle. This next candle, look at the liquidation. Again, this is a 5-minute. These are all 5-minute buys, folks. Okay, look at the liquidation when the market couldn't get back up inside the 15-minute range. Total liquidation. Gets down below, breaks through the first hour low, comes right back up to it, gives it up again. Market tries to rally again, and look, can't get in there. No way, no how. Literally tries it. Okay, couldn't do it. The bulls were giving it good effort, and I applaud them. Okay, but they couldn't do it. Gave it up right here at the 961 and a quarter. And that's all she wrote for the rest of the day. That was approximately around 1 o'clock. Now, for all of you that know, we do have trade zones, and that is one of them. That's around the 1 to 115 time frame, where we usually either retest the high, retest the low, take out the high, take out the low. That's a very, very important structured time frame. Okay, that's what these bars are. That's what these lines are telling us. It's an important structured time frame. So here we are, we sell off all the way down to about looks like about 925, 927 area. Okay, try to make a feeble bounce up, and because we're below this first hour and so much below it, it's a good chance the market usually sells off into the close. Okay, and that's just based on probabilities, based on how the market is structured. Okay, now this happens over and over and over and over again. Okay, can you make these? Yes. Okay, can you just say, I'm going to put a line at my 15 high, my 15 low, my 1 hour high, my 1 hour low? Yes, you can. This also all gives us ranges. Okay, it does give us on the open, it gives us ranges based on prior day range, and then ranges based on the overnight globexation based on the volatility. And it's very, very, very predictable. These are some of the ranges today. It actually did print another one as well. But the point I'm trying to say is there was a Globex low down here about the 34 area, and it actually even went even lower. Market closed at 903.75. But at any rate, not looking for strength into the close by any means based on this structure. So if anything, it keeps you on the right side of the trade. Now, if I was trying to be bullish, at least I would realize that it's not time. Okay, let's move over to the next picture. Okay, folks, here's another one. This is on the 13th. Okay, here's our average. Here's our 15 high, our 15 low, our 1 hour, and our 1 hour. So here the market opens up, immediately sells off, breaks through the 15, comes down to the 1 hour, bounces right back up, okay, gets above, gets inside this range now, gets inside the 15. Now this is, you get a little now. Now we're looking at a turnaround, okay, because we've hit and we've bounced, and now we pulled back inside the trading range. Now the trading range is most important, is that 15 to give us the overall direction. So the market shoots straight up, okay. Now again, folks, you just saw me show you that clearing candle to the downside at about the same time, okay, when the market decided what it wanted to do. Here's the 15-minute range here. This is the average open and low, and then pops right up, clears it right through, comes back up to the first hour high, comes back down to the 15 again, and see these little tails? These are all tails. Market never even closed inside. Went sideways, built up some cause and effect here, came right back up, came back down again, blasted up, came right back down the first hour, and then ripped right up into the close for almost 1,000-point move that day. Now, if you turn this chart upside down, it's the same thing you just looked at on the last one that just sold off today. Okay, we came back up. You saw it. We came back up to the first hour high. We couldn't take it out, and then we just fell into the close. This came all the way back up to the first hour high, and then off it went. Okay, so you couldn't get back inside this range. Okay, this is why you can have a bias, but you gotta base it on something. Okay, and this is one of the things that we always use, is these balance. These are very, very good. And again, the levels it prints are very dynamic, so meaning that they'll print, they'll give us all the key levels. It'll basically riddle us with levels that we have to look at, and then once the days passes, those levels will leave, and you end up with just these lines. Okay, I'm going to go to another one. As a matter of fact, hold 1 second. And here's a chart on the 9th. Okay, and again, open range. Okay, couldn't get back up inside it. Made your first hour low. Okay, broke below it, back up to it, came down, back up to it, got actually inside. These are our turn point candles, our white ones. Came back down, made a lower low. You can tell this is kind of a head and shoulders. Came back down, came back up again, and notice all these reversals, all these rejection candles, okay? All these tails, okay? In other words, you couldn't get this market inside as much as they tried, and they sold it off into the close, okay? Now, the irony of this is the way this structure and symmetry set up. On the today, we closed at 903.75 with very similar market structure. This is on the 9th, okay, and we closed at 903.75. I mean, literally right on the tick, with very similar structure and very similar picture of the market. So what I'm trying to put to you is, watch your 15 minutes, watch your hours, know your key levels. It will make you so much of a better trader, and you'll get an idea on market structure. So much better than you ever have. Okay, if you do have TradeStation, we do have these indicators available. We are getting them on other platforms. Currently, right now, they are available for TradeStation. Other than that, a little extra work. Just look at your prior day's high-low closes. Look at your 15-minute. As far as the open range average goes, you can kind of just draw a line on that. And if you don't have that ability, it's not crucial, but it does help. But this is how I believe the pros look at it, because obviously the market definitely does follow a set of rules here. And I hope this helps, guys. I told you I would be going over more and more of these, and I will. I do post some of these live with the levels over on Elite Trader under daily S&P levels, break up and break down targets. That's the heading. So you can see these live. I posted one today with the level and the breakdown levels and so forth and so on. Extended targets from what you're actually already receiving by email. All right, guys, take care, and again, trade safe.